Welcome to Private Asset Management's Week in Review. Today is Friday morning, September 9th. I'm Dillon Hakes. I'm joined by a new face for our video series, our senior research analyst, Alex Dietz. Alex, a positive week for markets this week.
Thanks, Dylan. It's been a light week for economic news. Thankfully, the markets have rallied after a pretty tough stretch post a Jackson Hole meeting where the central bank reiterated their pretty aggressive monetary policy.
Alex, you mentioned the light week for economic news this week. One piece of interesting news that we did hear, we heard some news out of China. China continues to pursue this zero COVID policy that they've been on for a while trying to do. There was some lockdown. What did we hear out of China?
Yeah, you're right, Dylan. So we've been hoping for a while now that China would finally do away with this COVID zero policy, but unfortunately, over the last week or so, we got some negative news concerning that. And actually, one of these large cities in China called Chengdu, with around 21 million people, has actually locked down completely, and the restrictions have been pushed out another week. So we don't know how long this is going to last, but it's definitely not great news for the supply chain issues that we've been covering for the last year and a half.
You mentioned supply chains, which have been a woe for the majority of the year this year. We got some data the last couple of weeks that seemed to be pointing positively. What did we learn last week and this week?
Right, so this week we got the ISM services data, and last week we got the ISM manufacturing data. Both reports looked really strong, going in the right direction, exceeding expectations. Something notable from the ISM manufacturing surveys, however, was that we're seeing supplier delivery times come down, and we'd seen input prices come down as well. So that's been a good sign in the inflation fight. However, our concern is that some of these Chinese COVID lockdowns could potentially revert some of those gains that we've seen.
I think it will be interesting to watch these two competing things and see which trend actually takes over. The lockdowns are definitely of concern. One report we have next week that I think a lot of people are going to be paying attention to is the CPI report that's going to come out for August that we'll get next week. It begs the question, everybody's paying attention to the inflation. Have we seen peak inflation? Are these China lockdowns going to send us back into a reversal where inflation reaccelerates?
That's a really tough question to answer, Dylan, but I would say that it's a lot of analysts view that whether or not inflation has peaked is largely going to come down to what happens with commodity prices. And as we've seen of late, oil prices have come down, metal prices have come down, agricultural prices have come down. That all bodes well for the consumer. But I do think that these Chinese COVID lockdowns do have the potential to put further pressure on some of these prices. So, as China announced some of their lockdowns, we saw oil prices fall down below $85 a barrel, seeing a lot of metal prices come down significantly. And so while you might see supplier delivery times increase, or it might be harder to get some goods from China, you might see lower commodity prices that could offset some of those changes.
Alex, you've mentioned what's happened to the price of oil recently. What's happened just in the last few weeks, the last few months, it's sort of shocking to see. The conversation earlier in the year, when the war broke out in Europe, was just how high the energy prices had gone. How everybody felt it at the pump earlier this summer. But just as quickly, it seems like things have dramatically reversed lower. Is this something that's likely to continue? Are we going to continue to see these lower oil prices going forward?
Right. So I think some of the overly pessimistic estimates for oil prices to shoot up to $200 a barrel proved to be too pessimistic. I think moving forward, we should probably expect oil to be in a range around $70 to $100 a barrel. I don't see it going back to levels we've experienced over the last 10 years. But I would say that most of the story is focused on the supply side of the equation. So U.S. energy production hasn't been growing as it did before COVID. OPEC has kind of restrained production. But I think a big piece of the story that's been missing has been demand, right? Everybody's been focused on supply, but we're seeing weaker demand out of China, and that partially has to do with the COVID zero policy. So if Xi Jinping and China were to abandon the COVID zero policy, you could potentially see a reacceleration in oil prices or commodity prices more broadly. On the other hand, if they continue with the COVID zero policy, this could essentially act as a cap on oil prices, and that could help help the Fed in its fight against inflation.
That does sound mostly positive. I think everybody's looking forward to, potentially seeing some lower gas prices, in the near term, but also, a little bit longer term. The other side of the energy picture that we heard some news this week was actually out of Europe. There was some news about what's going on the energy side of things in Europe with Russia and Germany. What did we learn this week?
Yeah, so unfortunately we got the news that Russia has completely halted gas flows through the Nord Stream pipeline to Europe. This comes after they had already reduced the amount of gas flowing to Europe. Now they've just cut it all the way down to zero. And unfortunately, it sent electricity prices soaring for most European consumers.
So you mentioned energy prices have soared in Europe. There's also some concern about what this might mean going forward for the rest of the year as they go into winter. What are those concerns about?
So the main concern is that Europe won't have enough natural gas to get through the winter, particularly if it's cold out. And if this happens, you will likely have to see a lot of industrial capacity throttled, if not completely shut down. This would have a pretty big impact on economic growth, especially for some of the countries like Germany.
It does seem like Europe is headed down a difficult path for the next year or so. Does that mean that the U.S. is going to import their problems here locally?
I don't think that the problems Europe is facing necessarily translate to us feeling those same problems. It's important to remember that we have a massive energy industry here, and we're actually a net energy exporter. So obviously we produce a lot of oil, but we also have some of the most prolific natural gas fields in the world. So we are definitely much more insulated from the problems that Europe is facing. Now that being said, any slowdown in economic growth in the Eurozone could impact some of the larger companies in the U.S. that have exposure to Europe in the form of sales.
All right, Alex, what do we have on the agenda for next week?
Next week, we have a lot of important data coming through. So first, we have CPI. We also have PPI, retail sales, inflation expectations. These are all very important reports for the Federal Reserve to help decide whether or not they're going to be increasing interest rates by 50 basis points or 75 basis points. And so we'll have a better idea of what their decision will be after next week's data.
We'll look out for that report next week. I do think the CPI report is going to be something everybody's going to be watching closely. I think everybody's paying attention to see where that number ends up coming out. I want to thank everybody for joining Private Asset Management's Week in Review. I say it every week, but if you're enjoying these videos, please go ahead and like and subscribe on our YouTube channel. We will see everybody next week.